Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. US and European futures drop with investors cautious of the US president's tariff plans. Donald Trump says he'll announce auto levies soon and suggested some countries will receive breaks from reciprocal tariffs. The US and Russia are due to release a statement today on their talks on Ukraine in Saudi Arabia. That's according to Russia's TASS news service. Ukraine's envoy to the US tells us that Kyiv would unconditionally support a full ceasefire. Plus, HSBC doubles down on Asia and the Middle East after exiting key businesses in Europe. CEO Georges El-Hedary speaks to us exclusively.
Obviously, we want to double down on all our capability around debt. That's debt capital markets, leverage acquisition finance and other financing activities, because that's the heart of everything we do globally.
Happy Tuesday, everyone. Let's check in on the markets then. More tariff confusion, frankly. Maybe auto tariffs could be coming, quote, in days, according to the US president. Pharmaceutical tariffs could be coming at some point soon. And maybe there will be carve-outs for some nations on April the 2nd, Liberation Day, as it's been framed by the Trump administration. You did see gains yesterday on the tariff story, on the reporting that the broad-based large tariffs may be more targeted. And you saw the upside pronounced on the Nasdaq 100, gains of more than 2%. The S&P rallying 1.8%. Today, a little bit of a different picture, moderating the upside. Currently, you're seeing a European futures picture off by 0.3% after losses of 0.1% by the end of the close across European stocks yesterday. Here in the UK, FTSE 100 futures pointing low by 0.4%. It's that crucial day, of course, for Rachel Reeves and the Chancellor on Wednesday with the spring statement and details about spending plans and potentially spending cuts as well. S&P futures pointing low by 0.1% after the upside that came through yesterday. Nasdaq 100 futures now off by 33 points. It was Mag 7 that did the heavy lift. Let's flip the board and have a look cross asset. You saw yields jumping 9 basis points yesterday on the benchmark 10-year. Today, moderating. There's a little bit more stability right now in the Treasury market. 432 on the benchmark. Euro dollar currently at 108, currently flat on the single currency. The Fed's Raphael Bostic as well, talking about just one cut potentially for this year. And part of that is down to the uncertainty around the tariff impact. Brent trading at $73 a barrel and gold holding above $3,000 right now. And the yellow metal up 0.2% in today's session. Let's cross over right now to Hong Kong, where Avril Hong is standing by for a check on the Asian markets. Avril.
Yeah, Tom, we're seeing Asia's markets looking quite cautious as the clock continues ticking towards April 2nd. And I think a function of that is also what you're seeing in the Chinese tech names as they become a bit more sensitive to any corporate developments. We had the likes of Alibaba's Zhou Zai talking about how there seems to be a bit of a bubble emerging in terms of the build out of AI data centers. And then you had some developments out of Xiaomi as well in terms of its share sale, which in theory should help it to build out EV capacity and help with some of this R&D, but it is among the stocks that are actually treading lower in the Chinese tech gauge today, which is actually pulling away even further from the highs that we saw earlier this month. So approaching correction, and you're seeing that 3.4% down on the Hang Seng Tech on a day where already Asia is looking increasingly cautious as the session progresses. You're looking at the Nikkei erasing earlier gains, even though the yen is among the currencies that are managing a bit of firmness. You flip the board and take a look at how the rest of Asia, among the declines in FX is the yuan as well. You're seeing it declines for 6-7 days. Part of this, the tariff question marks, but also traders assessing the PBOC's new sort of tweaks to the MLF and that move away from the 7-day reverse repurchase rate as a form of the monetary policy mechanism. So we're seeing the renminbi really getting hard hit for the past couple of sessions.
OK, Avril Hong in Singapore, in Hong Kong, in fact, for us today. Usually in Singapore, has moved location for us today in Hong Kong. And, of course, the comments around from Zhou Zai of Alibaba around the data centre build-out, as Avril was mentioning, weighing certainly on Alibaba's stock, and that is having a broader push lower on HS Tech in the session today, taking the wind out of the sails, at least for now, around the tech story of China. Let's switch over now to what is happening on the tariff front. And I touched on some of the detail in the headlines in the market check, but President Trump says he will announce those tariffs on vehicle imports, quote, in the coming days, while indicating that some countries will receive breaks from next week's reciprocal tariffs. The comments sowed, of course, more confusion upon confusion upon confusion about his plans, which are due to be announced on April the 2nd.
We'll be announcing cars very shortly, and we already announced steel, as you know, and aluminum. We'll be announcing pharmaceuticals at some point in the not too distant, because we have to have pharmaceuticals. We don't make pharmaceuticals anymore in our country. And if we have problems like wars or anything else, we need steel, we need pharmaceuticals, we need aluminum, we need a lot of these things.
OK, Bloomberg's Katia Dimitrieva joins me now for the latest. Katia, is this a Trump administration that actually knows what do they know what they're doing come April the 2nd? Is there a plan? Is there a clear, thought-out plan that they're going to lift the lid on? Is this uncertainty all part of the kind of matrix of this Trump administration? Do they know what they're doing on tariffs?
Well, if there is a clear plan, we certainly don't really know about it yet. As you mentioned, I think confusion upon confusion is probably the way to look at it. So far, we know that these tariffs are coming April 2nd. That's it for the deadline. We also heard Trump saying before, last week, I believe, that there would be tariffs coming on autos, pharmaceuticals, and the latest announcement kind of gives us a timeline. So now traders and investors, economists are expecting that these auto tariffs will be coming, that auto tariffs specifically will be coming in the next few days, and there will be additional announcements to come. That's in quotes from Trump, but no idea of which countries in particular. He also mentioned carve-outs. He said there will be carve-outs for many countries. We don't know what those countries might be. We know that they've been certainly negotiating for very heavily in recent weeks, so they might see some carve-outs there. We saw the Mexican peso, of course, rallying on that, some hope there that maybe Mexico will get some carve-outs, as the president's been very involved. So overall, we know that they're coming April 2nd. We know we'll get kind of dribs and drabs of it this week, because as a reminder, April 2nd is next week. And that's about all that we know, in addition to additional news on tariffs from Venezuela.
Yeah, and that's another dimension, isn't it, Katia, in terms of the threat, 25%, the threat of 25% levies on any nation who buys Venezuelan oil. What are the implications of this latest move?
Yeah, it really comes in sort of when it rains, it pours. And so in addition to the tariffs, there's a slight kind of more details we got from Trump, is this tariff on any country that imports Venezuelan oil. So it's not a tariff on Venezuela, it's on countries that import the product. And so that would include China would be a big one. And it sort of sets a new precedent because we haven't seen this used before. It's usually related more to sanctions, secondary sanctions. This is kind of one of the first times that they're targeting third countries that import oil. And included in that list, I should note, is the U.S. U.S. companies like Chevron also import Venezuelan oil. So that remains to be seen. There is some scope for Marco Rubio to sort of carve out, again, for particular countries or particular companies to not face this levy. But it's certainly another, in addition to the tariffs we heard from today. And for China, what that means is that they could face, at this point, essentially, a 45% tariff on goods coming into the U.S. So that's a pretty heavy hit. Yeah,
if that is the reality, that is certainly going to have an impact, isn't it? You would imagine that developers, or at least manufacturers in China, are not going to be able to absorb all of that, as Scott Bessent, the Treasury Secretary, suggests he would hope to see. Bloomberg's Katia Dimitrieva on the latest when it comes to the tariff stories for build up to April the 2nd. Katia, thank you for breaking it down for us. Let's get to the stock story then, because that was partly fueled, of course, by the tariff story and expectations that maybe the tariffs will be moderated to some extent. US stock sell-off easing then after what we saw in terms of the reporting around the potential targeted approach by President Trump when it comes to these tariffs. We saw a strong rally in NASDAQ 100, decent gains across the S&P 500 as well. Some of that's moderating in the futures picture today. Bloomberg's Valerie Teitel with a touch point, of course, on the market reaction. Valerie, how are markets positioning then ahead of April the 2nd? What do you read into the rally of yesterday?
Look, the equity market sure is on a firmer footing heading into that April 2nd date. It really felt like a short squeeze in the market yesterday. The S&P 500 notching its third best session of the year. Perhaps we just got a bit too bearish on the prospect of an economic slowdown in the U.S., and we're seeing this unwind in the market at the moment. So the S&P 500, third best session of the year. The NASDAQ climbing as well. A lot of that driven by this crazy move in Tesla, up 12% on the session yesterday. We also saw Treasury yields rise across the curve. Part of that recession trade maybe being unwound in the Treasury market as we got that hot economic data. The PMIs, especially the services PMIs, came in with a beat yesterday and kind of escalated the losses in the Treasury market.
And Val, we're also seeing an adjustment in terms of Fed expectations and Fed bets from the markets. How is that story lining up?
Yeah, interesting one, Tom. You know, the string of okay economic data is really throwing the face of more Fed cuts to come. Are we headed for 2? Are we headed for 1? But that 2-year yield is back above 4% now. And we had Mike McKee sitting down with Atlanta Fed President Raphael Bostic yesterday talking about how he sees less cuts in 2025.
2, I moved to 1, mainly because I think we're going to see inflation be very bumpy and not move dramatically and in a clear way to the 2% target. Because that's being pushed back, you know, I think the appropriate path for policy is also going to have to be pushed back in getting us to that neutral level.
So Raphael Bostic talking about how he sees this bumpy ride forward for inflation as a reason why he's paring back his expected Fed cuts. But members out there in the market paring back their estimates as well because we're not getting the worst confirmed from the U.S. economic data of late. That services PMI beat being the latest of a string of beats for the services sector of the U.S. economy.
OK, Bloomberg's Valerie Teitel, thank you very much indeed. Market's still pricing in around 2 cuts from the Fed this year. Now, officials from the US and Russia have held lengthy talks in Saudi Arabia as President Trump pushes for a Ukraine ceasefire deal. Russian news agency TASS is reporting that the dialogue was not easy, but useful. That's according to Moscow's negotiator. It comes after talks between American and Ukrainian officials, which Kyiv described as productive. Ukraine's president has called for, quote, strong steps to pressure Russia into a deal.
We need a movement towards real peace, towards guaranteed security. And we all need this. In Ukraine, in Europe, in America, everyone in the world who wants peace in international relations. Russia is the only entity that is dragging out this war and mocking our people and the whole world. And to pressure Russia towards peace, strong steps are needed.
Let's bring in Bloomberg's EMEA News Director, Ros Mattison. Ros, we've had a few reports on the Russia-US talks. We're waiting for some details. They could be crossing any time in the next few minutes, possibly the next few hours. What's the latest at this stage, Ros?
Well, that's right. As you were saying, we just had the chief Russian negotiator speaking in the Russian state news agency and saying that talks were difficult, but, you know, seemingly useful. And we know they went on for very long time. Yesterday, it was something like 12 hours in the end. So obviously they got down to a high level of detail in that conversation. The question is, as you say, what are we going to get out of it? It seems like the talks yesterday were very technical, largely focused on getting agreements around maritime traffic in the Black Sea. So are we seeing, in a way, a kind of Lego ceasefire approach? You try and get one ceasefire and you stack it on top of the other. So you get an energy ceasefire, although, again, we're still seeing Russia continue to attack Ukraine, and Russia saying that Ukraine is still attacking Russia, despite that apparent understanding. But are we going to get something in the Black Sea for maritime traffic, which is important, obviously, for trade and for grain and other things? And then do you tackle the really complicated one, the hard one, which is the actual line of contact on the ground between where Russia and Ukraine troops have been fighting now for a number of years? And that one, it seems, may not have been on the table yesterday. So they probably spent 12 hours in a very technical level of detail about the Black Sea in particular. But it just shows how complicated it's going to get to reach that full ceasefire on Ukraine, and it may take a lot longer than Donald Trump wants.
Yeah, and you have to wonder if US officials are using the Signal app to share information about those negotiations, because the Atlantic's top editor, this is a remarkable story, says he was added to a text group where US Defense Secretary Pete Hegseth shared detailed plans for bombing Houthi militants. So to the Middle East. Jeffrey Goldberg says he received a connection request via the encrypted messaging service Signal from National Security Advisor Michael Waltz. A White House spokesperson says the report appears to be authentic, and they're reviewing how the journalist was added to the conversation. Ros, if this report is authentic, and this comes from a journalist with deep, of course, experience and someone who's well respected within the industry, it presumably raises some pretty serious questions. The writing, the reporting around this is remarkable.
Well, that's right. And the White House seemingly acknowledging that this did happen, that he was privy to very sensitive, high-level operational information about the plans to bomb the Houthis in Yemen. And also a lot of the conversation reportedly between very, very senior officials in the US administration, where they're talking very candidly, they're using a lot of emojis, and they're talking again quite critically about Europe. So apparently talking about freeloading by Europe, having to bail Europe out again by bombing the Houthis single-handedly, whereas we know that for many, many months, these operations to police the Red Sea, to target the Houthis in Yemen, have been combined operations involving often the UK, France, and many other countries. So this has not just been the US going it alone, but it shows again to Europe, if they really needed to hear that message, that the US is seeing Europe in a very different light these days. It's not talking about allies and working together. This is becoming an increasingly adversarial relationship, including in the security and the geopolitical space, and that Europe has to get its own act together when it comes to defense and self-reliance in that regard. So some quite critical comments from Europe that were made apparently in that chat. And again, the key question is around intelligence sharing. If this is something that could happen with very, very sensitive information, can you rely on the security of whatever you're sharing with the US? Because a lot of countries do that. And so there might be some fresh questions around how much intelligence they're able to share. I mean, they're all reliant on each other, so they probably won't stop entirely. But that will raise questions, I'm sure, on the halls of power in Europe today.
Yeah, Bloomberg's EMEA News Director Ros Madsen. Yeah, the commentary indeed from the Vice President J.D. Vance and the Defence Secretary Pete Hegseth, of course, around Europe, and their views on Europe really do stand out certainly if you're sitting there in Brussels. Ros, thank you for the latest on the talks, of course, out in Saudi Arabia, but also the latest in terms of the security information sharing on the Signal app by senior US officials, according, of course, to reports. Coming up, HSBC plans to double down on investment banking operations in Asia and the Middle East. Highlights from our exclusive interview with HSBC CEO George El-Hedary. That is next. This is Bloomberg. Welcome back. HSBC CEO George El-Hedary plans to double down on investment banking operations in Asia and the Middle East after exiting key businesses in Europe and the US. We spoke to him exclusively at the bank's Global Investment Summit in Hong Kong.
So what we announced is we will be incurring about $1.8 billion of cost, essentially severance costs.
Okay.
That the saving, most of the decisioning for that will take place this year. Most of it will take place in the first half of the year. That the benefits will start materializing this year, with a $300 million benefit will come this year. That the benefits will materialize in full by the end of full year 2026. So the full year 2027 will benefit from the full $1.5 billion saves that we're targeting. What we also committed that these will be permanent saves going forward, and that we're taking these saves straight to the bottom line. So it's a payback period of effectively roughly 2 years, but it's a permanent benefit that we will achieve.
And then the other component there is a further $1.5 billion, which I was looking at your earnings statement, and it was page 11 or 12, I think, of the strategic review. And the way you phrase it there is a reallocation of those costs into growth businesses. So I think it's a two-part question I have is, if you're reallocating costs, is that a net savings? Is 1.5 billion net savings? And what exactly are you looking at doing? Because there's not a lot of detail on that.
Yeah. So the organizational simplification benefits, which are efficiency saves, not impacting revenue in any material shape, $1.5 billion, those will be taken to the bottom line. That's the first $1.5 billion.
Yes.
Now, additionally to that, we're also looking at the what we do and recognize that there are further focus that we can achieve in our business, where we will be taking $1.5 billion from activities that we are currently doing that are either non-strategic or non-returning, and we will reallocate these $1.5 billion as we materialize the saves. We'll reallocate them back into areas where we have competitive strength, where our customers expect us and need us to be, where we can generate good returns, and where we have greatest opportunities to grow. This second $1.5 billion, the revenue we will lose against it because we will be stopping activities.
Those units, those assets, yeah.
Those assets. We expect to be able to generate better quality revenue instead, because they're more strategic or higher returning.
And have you told your team, have you given a timeline for that second tranche of?
Yeah, we expect to do it in the medium term, but there are a number of these initiatives which we already communicated to the market. For instance, about $300 million of this $1.5 billion will be delivered through our decisions around investment banking, in particular M&A and ECM in Europe and in Americas, where we're basically scaling down this activity. And others will come from other inorganic activities, such as the sale of our German private bank business, the sale of our French insurance business, Bahrain retail business, etc.
Looking at the timing of perhaps, and I know it's under review, so I'm not sure how much detail you could give at this point in time, but you mentioned a lot of those decisions will be made over the next few months. And correct me if I'm wrong, I think the timeline you gave was you want to complete the review by June of this year. When do you think you'll be able to make meaningful announcements?
So with regards to the efficiency saves, most of the announcements are done. The rest is execution. We will be able to talk to how much we've decisioned. But again, we have committed to achieve these saves by the end of full year 2026. So we're working on that timeline.
Right.
With regard to the reallocation of costs from non-strategic or low-returning areas to strategic, areas of stronger competitive advantages and higher growth prospects, and obviously higher return prospects, we will announce as and when we have something to announce. So as I said, I've shared with you some of the ones that we've gone public with, and then the rest, as and when we're ready to announce, we will make it public.
I mean, suffice to say then you're happy with your footprint, or if not, looking to increase your footprint here?
Absolutely happy with our footprint.
What about investment banking in Asia Pacific?
Absolutely happy with our investment banking in Asia Pacific. Look, for the investment bank, we obviously want to double down on all our capability around debt. That's debt capital markets, leverage acquisition finance, and other financing activities, because that's the heart of everything we do globally. And in regards Asia and the Middle East, we want to also double down our capabilities in M&A and ECM. So the exit that we're processing now in Europe and the Americas is to allow us to focus at the areas where we can really be differentiating to our customers, where we play to our competitive strength, and where we really bring value.
Turkey's top economic officials are set to hold a call with foreign investors today. It is the latest attempt by the government to calm markets after the arrest of Istanbul's Mayor Ekrem İmamoğlu, triggering protests that sent Turkish assets tumbling. Those protests continued overnight. There's plenty more coming up. Stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. US and European futures drop with investors cautious around the US president's tariff plans. Donald Trump says he'll announce auto levies soon and suggested some countries will receive breaks from reciprocal tariffs. The US and Russia are due to release a statement today on their talks on Ukraine in Saudi Arabia. That's according to Russia's TASS news service. Ukraine's envoy to the US tells us Kyiv would unconditionally support a full ceasefire. Plus, HSBC doubles down on Asia and the Middle East after exiting key businesses in Europe. CEO George El-Hedri speaks to us exclusively.
Obviously, we want to double down on all our capability around debt. That's debt capital markets, leverage acquisition finance, and other financing activities, because that's the heart of everything we do globally.
OK, HSBC CEO in his first exclusive conversation with Bloomberg talking about the plans for the business and the focus on Asia and the Middle East. Let's check in on the markets then. After a strong session on Wall Street, gains of 2.3% for the Nasdaq 100. Mag 7 was back. Tesla saw double digits. Worth noting that Tesla's sales in Europe continue to slump. The latest numbers out of Europe for the month of February pointing to a drop of around 40% for Tesla. So the challenge in the European market for that automaker continues. Nonetheless, it was a decent session yesterday for Tesla, for Mag 7. Today, European futures pointing lower by 0.2% after dropping about 0.1% yesterday. FTSE 100 futures here in the UK pointing lower by 30 points, down 0.3%. S&P futures stateside off by 0.2% after gaining 1.8% by the close yesterday. Nasdaq 100 futures, as I mentioned, a solid day yesterday, though, currently pointing off just by 0.2%. Let's flip the board and have a look. Cross-asset yields jumped 9 basis points on the benchmark 10-year. We've been hearing from the Fed's Raphael Bostic saying he now expects just one cut to come through from the Federal Reserve this year, having moderated that from 2. Expectations of continued uncertainty around the impact of Trump's tariffs. And certainly that was a story yesterday that actually led to the gains in the equity markets on the reporting that maybe the tariffs come April the 2nd will be more targeted than some had feared. 432 right now on the benchmark 10-year. Currently euro dollar at 107, back below 108. Little softer in the session. Brent at $72 a barrel, down 0.2%. And gold's currently holding above that $3,000 level. On the yellow metal, up 0.2% in today's session. Let's get to the Tesla story then. Sales have fallen in 10 of the past 12 months in Europe. The latest figures from the European Auto Manufacturers Association showing the car maker registered just under 17,000 new cars last month. That is down 40% from the year before. Bloomberg's Asia transport reporter Danny Lee joins me now from Hong Kong. Danny, how much of a challenge is this for Tesla? Does this paint a broader picture of weakness across Europe for this automaker? And how much of this is down to politics? How much of this is down to a softening European economy?
This is a real challenge for Tesla in a key market. The fact that sales are down 40% in February. And when you look at EV sales in Europe across the whole, up 31%. So a real existential challenge in a key market. And, when you look at, the Q1 figures that they're going to release in about a week or so from now, it paints a pretty grim picture that investors have been worried about, given the involvement of Elon Musk in politics more broadly, particularly not just in US politics, but weighing into European politics. So this is a challenge, and consumers have largely been put off, not just in Europe, but as you see sales, not just in Europe, but around the world, particularly in Asia. Tesla is starting to fall off. So not a good look when you see these latest set of sales numbers in Europe.
Yeah, the challenge in Europe, the challenge in China as well for Tesla. And we'll see, of course, how the stock responds to that after the gains that came through yesterday for Tesla. Bloomberg Asia transport reporter Danny Lee in Hong Kong. Danny, thank you for the update on that story. Switching focus to the UK right now. A massive week, of course, for the Chancellor, Rachel Reeves, expected to announce billions of pounds in spending cuts during her spring statement tomorrow in an effort to restore the government's financial position. Reeves has blamed global volatility, including the war in Ukraine, and the threat of an international trade dispute for the need to take divisive action. Very pleased to say I'm joined now by Gina Miller, founding partner of investment platform SCM Direct and 2024 UK general election candidate for the True and Fair Party. So someone who comes to us with the experience politically and, of course, when it comes to the world of business. Gina, what do you want to see? What do businesses and investors want to see from the spring statement? What is top of your list in terms of what you hope to hear from the Chancellor tomorrow?
I think two things are really important is that somehow she pulls back from the changes or the pressures that are going to be put on businesses with what's being called the tax employment taxes. Because, you know, businesses, especially small and medium-sized businesses, are really worried about the impact of the hikes in national insurance contributions and employment changes that are going to come around. Because this means that, you know, we're going to be looking at higher operational costs, we're looking at prices going up, and those will pass on to consumers. So it's really worrying that what's happening. We've already seen the effects with lots of companies making job cuts and really worried about taking on young people in particular. The other thing that's really important is that they do not go ahead and spiral into what the ex-economists of the Bank of England called the doom loop of really cutting back on spending across government departments, because that will be counterproductive in the end, especially as we need some growth. I mean, the predictions on growth from the Office of Budget Responsibility and the Bank of England is being downgraded from sort of, 1.5% to 0.75. That's not good for business. That's not good for confidence. That's not good for inward investment.
Do you think the markets will give the Chancellor the latitude maybe to rethink those fiscal rules? It doesn't seem like we've been hearing from the Prime Minister, we've been hearing from the Chancellor, they're deeply committed to these fiscal rules that they've set themselves. Is there a moment when they need to rethink those rules? And do you think the markets would give them that space?
Absolutely, because, we need to know what is the story that Labour are telling. And at the moment, we're not sure what that is. We don't know what they are as a government, what's their mission, what's their growth and strategy mission. But at the end of the day, when the Chancellor set her fiscal rules, her headroom in October, we already knew, most people knew that was very tight. But the world has changed since October. And, you mentioned in the clip you had there that the justification is because of what's happening with possible trade wars, tariffs, and also what happens with the war in Ukraine. But the world has changed, and therefore their rules should change. These are political choices. This is not something that's set in stone. She does have the choice, and they should be looking at making very different choices rather than targeting the most vulnerable in society. A Labour government should never be doing that.
I mean, obviously, the government, or certainly the Chancellor, would point out that the welfare spending bill is about, above £300 billion, that's about 10% of GDP. It's more than 20% of total government spending. That if there's anything that needs to be cut and made more efficient, is the spend on welfare, and that it's simply not feasible to see that continuing to expand. Look, Gina, you've been a big proponent of investing. You've got your investment platform, and yet you're advocating higher taxes on higher earners. Won't that just put a freeze on investments into the UK?
No, absolutely not. We've got, I've been working. There are lots of organizations. I speak to ultra high net worth individuals. There's an organization called Patriotic Millionaires. And we're saying that for this parliament, because of the fiscal situation we're in, to have a 1 or 2% wealth tax is actually something that we would sign up to. I would definitely sign up to it. Our clients who are higher net worth would sign up to it. We've got lots of people pressuring the government and saying, at this moment in time, a 1 to 2%. But that's not the only choice that the government have. There are other choices it could make. And this is the problem. It seems to be focusing on the disabled. £5 billion potential cuts being announced tomorrow for the most vulnerable in society, when it's got other choices, such as, consolidating pension schemes, looking at actually bringing in a rule where, say, 20% of asset allocation from pension funds. There's 3 trillion in assets sitting in UK pension funds. And, in 2008, across those pension funds, they were investing about 48.2% in UK quoted stocks. Now that's dropped to 7.6%. There are other alternatives that the government have.
Yeah, putting that dry powder to work in UK markets certainly is something that many have advocated to be looked at in more close and fine detail. Gina Miller, thank you, co-founder of SCM Direct, the investment platform, and of course, previously with that political career in that role, of course, campaigning against Brexit. Gina, thank you very much. Now, Airbus CEO Guillaume Faury says any potential tariffs between the US and Europe could be more problematic for the plane maker's rival, Boeing. Airbus's main factories are globally more spread out than Boeing's, which only assembles its aircraft in the US. In an exclusive interview with Guy Johnson, Faure added he's encouraged there hasn't yet been talk of aviation-related tariffs.
We had tariffs on aircraft 4 to 5 years ago between the US and Europe, and has been a lose-lose. Therefore, we had a ceasefire in 2021, and I think this experience has been interesting in showing that for a sort of North Atlantic ecosystem, both sides of the Atlantic, it is only lose-lose in putting tariffs. We have not heard about tariffs on aviation at the moment, on aerospace. I think that's a good sign. There's nothing more, I would say, really to prepare than to communicate, to exchange, to explain. We have a lot of infrastructure and manufacturing capabilities, final assembly line in the US. We are procuring from the US, we are selling to the US, and the US manufacturers are doing the same with Europe. So tariffs in the middle of the Atlantic would really be a big burden for both sides, and maybe that would be even tougher for the US manufacturers.
Have you been putting extra resources into the Alabama plant? Have you been stockpiling? There's no kind of preparations or anything that you have been taking on thus far in order to get ready for something that could be coming?
No, we keep doing what we've been doing so far, relying on Alabama, indeed. That's a plant where we have 3 final assembly lines. One is not yet delivering planes, but the 2 others are. So we are procuring from everywhere around the world, assembling there in the US with US jobs, 2 US airlines as well. So I think we are key to the US ecosystem, to the aviation ecosystem, and we think that plays a big role in how tariffs are targeted.
Okay, final quick question. You sit on actually the Business Council in America. You speak to CEOs there. What message did you take to them from Europe? What is the message that should be coming to A, US business, and B, the US administration? Well,
at the moment, I think there's a lot of questioning of where all this is going, what it will mean for which industry. So it's a bit on wait and see mode to understand better for how long tariffs could come, who will be impacted, how to respond to the tariffs, if any. As I told you, we are not directly targeted with tariffs at the moment, but indeed there is a lot of questioning and to understand better what is changing and how to adapt.
Airbus CEO Guillaume Faure speaking exclusively with Guy Johnson. Guy joining me now from the Airbus summit in Toulouse. Guy, good morning. How insulated do you think Airbus is then from these global trade tensions? And are they right to kind of put a spotlight on Boeing potentially being more vulnerable at this point?
Well, Boeing has a different model, Tom, and that is the critical factor here. Boeing basically just builds in the United States and then exports to the rest of the world. As Guillaume was saying there, Airbus has a footprint in the United States and Alabama, clearly has a huge footprint here in Europe and has a big footprint out in Asia. It's more geographically diversified, and in some ways that could provide protection. But he doesn't know at this point what he's looking at. Therefore, while there are probably preparations going on behind the scenes, at this point they can't commit or talk about really where they see this going. So at the moment they are very much in a wait and see mode at the moment. That is the policy right now. But they clearly calculate what happens. They clearly have an understanding that if tariffs come in, there will be an impact on the supply chain. They have models that they built that will give a clear idea, probably 1 year out, of what all the contracts that they have signed will look like once those tariffs come in. Ultimately, it could be that US carriers, US airlines take the bigger hit here as well, because they rely on Airbus for a lot of the aircraft that they fly around the world. Airbus has a lot of product that Boeing doesn't have in the market at the moment, and they rely on those aircraft. So as a result of which, life could get not only more expensive for Boeing, but it could get more expensive for some of the customers in the United States as well. But this is part of a wider picture at the moment, Tom. You've got to appreciate as well that Boeing and Airbus are locked in other battles too. What is happening in the defense space, absolutely critical. Boeing just winning a big contract in the United States for fighters. Here in Europe, Airbus is also pushing this line that we need an Airbus of space for Europe. We need an Airbus of defense for Europe. There needs to be significant consolidation. So the tariff story is just one part of the transatlantic story that is developing at the moment. You've also got the whole defense story, which Airbus sits at the center of here in Europe as well, and wants to play a big part going forward with that too as well, Tom.
Yeah, and of course you had that defence conversation with the CEO, so that's well worth listening to as well. Bloomberg's Guy Johnson on the ground for us at the Airbus Summit in Toulouse. Guy, thank you. Now, in about an hour's time, Guy will be speaking exclusively with the CEO of Qantas, Vanessa Hudson, so stay tuned for that conversation. Coming up, though, we're switching focus to technology in the SaaS space, how finance leaders feel about AI. We're going to discuss a survey on AI optimism and bring in Eléonore Crespo, the co-founder and business planning platform Pigment, one of the really hot properties in Europe, particularly within the SaaS space, with that AI overlay. That conversation coming up. This is Bloomberg. Now, there is growing trust in AI among finance leaders, yet 80% of them lack confidence in planning beyond 6 months. That's according to the findings of an annual survey of CFOs commissioned by business planning platform Pigment. The report also reveals that almost 3/4 of finance leaders would consider input from AI in decision-making, but most companies are a few years away from being able to fully maximise its value. So let's get more with the co-founder and co-CEO of Pigment, Eléonore Crespo. And this is a company, a startup in Europe, based, of course, in France, but a really hot property when it comes to the SaaS space. It's raised a lot of money. You've raised $145 million just last year alone. So this is a question about adoption. And you've seen tremendous growth. So you're seeing enterprises, your customers, including the likes of Coca-Cola, including the likes of Unilever, taking on your products and working with you. How much growth are you expecting to see this year? How much adoption are you seeing for Pigment? How much demand are you seeing?
So I think in 2025, more than ever, macroeconomic conditions are very, very complex to navigate. Companies need to constantly adapt, change, etc., because of what's happening in the world. And so given that Pigment is a platform that helps you solve for that, we see tremendous growth. We've seen that actually businesses need to adapt, first of all, proactively. They need to understand where to invest. They need to understand where to hire. But they also need to adapt reactively to what's happening. So they need to adapt to talent shortage, supply chain shortage, tariffs, etc., etc. And we help them navigate these macroeconomic conditions.
OK, so when the growth slows and companies come under pressure, your services are not the first to be cut, but they're a catalyst.
Absolutely, because we really help them optimize for their growth. And we really help them understand how to make the right decision faster.
And CFOs understand that, because there's the chopping block approach, isn't there, when the pressure is under on these companies around margins. They understand the needs to embed this technology.
Absolutely, and they know that they have to react faster than ever. They cannot wait months to actually take a decision around inflation, around tariffs. They actually need to work on scenarios as fast as they can.
And you have seen that growth, and it's stellar growth over the last few years, and you expect to see that continuing this year. Which regions stand out to you in terms of how quickly your services are being embedded across your enterprise clients?
So 60% of our revenue is actually coming from the United States. So this is where we see most of our growth coming from today, especially enterprise customers. We tripled the number of Fortune 500 customers just last year, and we've grown more than 2x actually in the US last year.
Is this year the year of AI agents? And how do you ensure security and privacy around data?
Yes, so it's absolutely the year of AI agents, but I think it's just the beginning. So what we've seen at Pigment is that we embedded AI since day one with machine learning, but today we are going a step further. So we launched our generative AI capability about a year ago, but now with our agents, we can actually help you proactively collaborate on your data and help you handle very complex and tedious tasks. So that means that today, you can go to bed at night, you can wake up in the morning, and the tedious work is done for you.
And as an enterprise, you can be entirely sure that your data is safe and secure within that system.
Yeah, so the reality is that Pigment is first, before anything else, a governance platform. This is why our customers have been using Pigment extensively, is because we have the right security access. We know exactly how to handle customer data. And so the way we embed our agents that are made with our own models as well as with OpenAI are really embedded with the right governance. And this is key to our customers.
You compete with the likes of SAP, which is now the biggest company by market cap in Europe. You compete with Oracle. Have they been tapping you on the shoulder? Are they looking to acquire your business?
So I'm looking to stay independent forever. We have, an innovation roadmap for the next 20 years, and so that's really what we want to do.
And you IPO in the US?
So I don't know, IPO might be a step on the journey, but it's not a topic for now. But clearly, if at some point we need to IPO, we will probably IPO in the US, yes.
How convinced are you that Europe has what it takes to compete with the US when it comes to AI? Is this our strength, building on top of large language models, with the kind of products that you're offering versus building out the foundational aspects of this technology?
So I would say both are possible, of course, but what we bring to companies with Pigment is really to actually build on top of this foundational model. And I do believe that this is the way AI will enter the enterprise. I do think that we need to serve this foundational model on the shelf to any customer out there. And this is what we do with Pigment. We specialized AI for specific work, for specific jobs. And I do believe that this is the next wave of AI, is actually creating business application using these foundational models to really help companies be successful and competitive.
And the US market growth, that 60%, does that continue to expand for you? Does the US become the dominant market?
I think so. I think so. We are also growing very fast in Europe, in the UK, in Germany and in France and in the Nordics as well. But the US is a country where we want to keep pushing very hard.
OK, Eléonore, thanks for coming in bright and early to the studio and talking through the prospects for Pigment, of course. Eléonore Crespo, Pigment co-founder and CEO, formerly at Index Ventures and Google. There's plenty more coming up. This is Bloomberg. It was the reporting suggesting that the Trump tariffs on April the 2nd will be more targeted versus some of the headlines that led to the upside in terms of the equity markets moves yesterday in the US. Here's the pricing, though. Comments from the president yesterday following that reporting suggesting that auto tariffs are coming in the days ahead, that maybe pharma tariffs are coming at some point soon, and that maybe some countries will be exempt from tariffs. The betting markets, though, in terms of Polymarket and Kalshi, have started to moderate. This is where they think, in terms of expectations of quote-unquote large tariffs, that expectation has started to dip somewhat, at least according to the Kalshi gauge. Polymarket as well, softening a little, but basically divided 50-50 in terms of where things go, which just reminds us of the uncertainty and the lack of predictability around the Trump tariff policy. Let's flip the board and have a look at what's happening in terms of the inflation impact of tariffs. This is a reminder. This is the China Export Price Index. You're looking at the white line here, and you can see how closely correlated that is to CPI in the US. So if you think that impacts in terms of the tariff impact on Chinese exports will be absorbed by manufacturers, maybe this raises a question in terms of what that does to price pressures in the US. And when we talk about inflation, we think about gold, still above $3,000. ETF inflows backed by gold have been sucking in flows. That story continues. You can see the upside. Do we get to $4,000 per troy ounce this year? Certainly in terms of the investments into gold-backed ETFs, that story is prominent. At 8:30 a.m. UK time, we're going to be speaking with the IAEA Director General Rafael Grossi on the US proposal to control Ukrainian energy assets. That conversation is coming up. The opening trade, though, is up next. Stay with us. This is Bloomberg.